Is the bottom end? Today, we're going to be breaking it down for you and some exciting news around Gary Gensler. You don't want to miss it. Let's just jump right in. I do want to mention here, guys, that we have one of our sponsors that's going to work with us on this one, which, of course, is Salt Lending. If you guys have not checked out Salt Lending, this is a place where, of course, you can go to do all sorts of things around unlocking your wealth potential for your Bitcoin. So check it out. Use the code down below. It kind of helps things out with the channel. And I wanted to bring in Shane Crockett, who we've had Shane on a couple of times. We've also had Hunter on. But I want to bring Shane Crockett in, who is the head of private client services over at Salt. How are you, Shane?
I'm good, Paul. Good to see you again. Thanks for having me.
Yeah, let's get into a little bit of what's going on. If the market has bottomed, usually we're looking for signals that indicate that. And one of the things that is a signal, at least I think, is when we have someone like a Gary Gensler that pops up out of nowhere. Let me play a clip for you, and then I want to get your opinion. Take a look.
What do you think of this? We've spent a lot of time talking about this.
I think it's a risk asset. All the thousands of other tokens, not the stable coins that are backed by US dollars, but all the thousands of other tokens, you have to ask yourself, what's the fundamentals? You don't get a dividend, you don't get usual returns. And so the investing public just needs to be aware of those risks. The US have the greatest capital markets, and they benefit from common sense rules of the road. And you want to know that you're getting the same treatment as the big investors. That's the fairness in these capital markets that are so important.
All right, so there you have it. Gary Gensler coming back in and fudding now Bitcoin. And the point that I think a lot of people are looking at here, Shane, is why. When you look at one thing Ron Hamlin was talking about, which I think is accurate, is another typical playbook reaction. We've seen legacy media now pushing the general crypto industry as bad narrative. This, of course, is right before a key congressional vote. 60 Minutes last night on CZ went after it, a New York Times piece on AML. I mean, this is like, it's choreographed. It's just constantly hitting us. When you look at that, and then you think about the amount of Bitcoin investors that are out there, digital asset investors, do you think anybody's paying attention to these guys anymore?
Yeah, I mean, I think there are still people that tune in to the talking heads, if you will, and take their opinions to heart. But there's never any shortage of FUD when it comes to digital assets, crypto, Bitcoin. And, I don't think that's ever going to change. I think to counter somebody's argument like this, I mean, what just happened last week? Look at, Bank of America's support and Vanguard, right? Vanguard and JP Morgan, the biggest anti-Bitcoin, anti-digital assets, TradFi players in the world, are now in support and offering products and opening up their brokerage clients to be able to buy IBIT and other ETFs. So it's like, I take this stuff with a grain of salt.
You mentioned Vanguard, and this was something we talked about quite a bit last week. With Vanguard stepping in, and especially for you guys, because you've got key asset managers out there that are thinking, hey, I've got a client here that's got a lot of Bitcoin. They're not wanting to sell it. They're wanting to go in. I know you manage a lot of those kinds of clients. With Vanguard stepping in, JP Morgan already kind of having their hand forced into this, has this kind of paved the way for major clients to jump into things like Bitcoin lending?
I think so. Yeah. I mean, I don't know if it's necessarily paving the way, but it's certainly adding some credibility. I mean, when those kinds of names get into this asset class, it just continues to signal to the broader market, like this asset class is for real. And yeah, it gives more credibility to this idea of doing more than just hodling, right? Yeah. People are really looking at how do I not just, buy a house and live in it, but how can I put that asset to work for me to reinvest and to do other things and have a more broad, financial strategy. And that's what we're seeing from a lot of the folks that I support through private client services is, hey, I've got some Bitcoin. I want to buy more Bitcoin. I want to buy real estate to acquire a business. I have a large IRS tax bill, or, I want to augment my retirement. What are some strategies that you guys can help me implement? And so, names like Vanguard, JP Morgan, Bank of America, kind of putting, Bitcoin in their portfolios and allowing their investors and their other folks to take part, in my mind, just signals that this asset class is for real.
Yeah, for sure. I want to, before I go over to rate cuts and how that might influence rates down the road, because obviously people are starting to try to figure out how to manage things like this, whether it's a Bitcoin loan or other strategies around your portfolio out there. I want to play this last clip from Gary Gensler, because he goes on about gold and silver now. And it's like, which route is he going here? Listen in.
Investors can express themselves in gold and silver through exchange traded funds, just like there is for gold and silver.
Yeah. Well, Mr. Chairman, I want to ask you about, speaking of plumbing in the markets, what happened at the CME last week. Should the CME be facing additional scrutiny?
On Thanksgiving evening, they had an outage, the cooling system in this data center, and they had an outage for about 10 hours. The markets planned for that. The Chicago Mercantile Exchange considered, they didn't go to their backup data center. They stayed partly because it was Thanksgiving. And look for lessons learned. You always look for lessons learned.
Well, we've experienced an incredible number of inquiries about this at Bloomberg. Our readers are asking, our viewers and listeners are asking about this. It put a real chill in the markets, to use a terrible pun in this case. Mr. Chairman, you don't sound that worried about this being systemic.
What happened here at this specific moment is the cooling system, as I understand, had a glitch. So that's an interesting business choice.
All right, so Gensler trying to tap dance around that. Point being is that these are the kind of market conditions that crypto alleviates away from with decentralized models, and of course, Bitcoin being one of the key ones there. When you look at where we are on the Fed rate cut potential, which is coming up here next week, the likelihood is that right now, I know Hassett's even pushing most likely to get a quarter rate point reduction. How will that affect things like Bitcoin loans, digital asset loans in the coming months as we start to see a rate decrease accelerate? What are your thoughts?
You know, I think the overnight funding, the Fed interest rates, things of that nature, that does have impact on capital markets and the folks that we borrow money from. So I think it does trickle in slowly, perhaps over a longer time period. I think what's really leading to improved rates within Bitcoin-backed lending is really just the additional number of players that want to get involved and the competition for that business. And a lot of that means, hey, offering lower rates and figuring out more strategic ways to secure financing so that you can be more competitive when you want to put your capital to work through a partner like Salt Lending.
Yeah. Do you find that that is the case right now? Are you seeing a lot more lender activity of people coming to the plate for partnerships, things of that nature that are really expanding this market? I know when we're watching at least the credit markets, this is going nowhere but up in terms of digital asset lending.
Oh, absolutely. I mean, the number of people that want to get involved is growing exponentially, right? And that's now even includes even some traditional banking players that have more alternative investment strategies, but at the end of the day are still banks, right? They're still
Right.
They still hold a bank charter. They still raise capital from depositors and investors the way a regular bank would, but they're looking at how they could put their money to work through a lending company partner platform like Salt, just based on the way that the mechanics of these loans work, the fact that, you know, we've never had a default, we've never failed to return borrower collateral. So when you really peel back the onion, our business model is a lot more secure than, say, lending unsecured credit cards or having a repo and go out and repossess a vehicle, or, you know, we don't really have any of those risks. And so I think as these financial players are learning more and more about that, they're going, oh, okay, there's a lot more risk mitigation and technology and things in place that protect our interests when our loans are backed by Bitcoin, as opposed to these other traditional, you know, again, unsecured or even secured loans that are backed by homes or cars or credit cards, whatever it might be.
So Shane, when you look at TVL in general, I think a lot of people would say, okay, I'm going to loan on my Bitcoin, but because of the volatility, I want to back off my exposure. I'll reduce my, TVL, or at least my loan to value, I should say, rate down considerably. Are you seeing more loans coming in with loan to value much lower, or are you seeing loans coming in where people are kind of pressing it?
You know, right now it's really everything across the gamut. And I think that's because there's a lot more people getting involved now because they're they're finally realizing that Bitcoin can be a strategic asset, not just a savings account.
Right.
And so we have a lot of people on the lower LTV range who are looking at like a Bitcoin powered lifestyle, right? Maybe they're wanting to retire on their Bitcoin, they're wanting to augment their income or things of that nature. So they're taking a more conservative approach. And we have others that are looking to find that balance, right? I want to maximize the liquidity value of my asset, but I don't want to take too much risk. So maybe they're at like a 50% LTV. And those are the folks that are, reinvesting. They're out buying stocks or equities. They're out buying other businesses. They're developing real estate, things of that nature. And so again, it really is a good mix of people all across the LTV spectrum, because just the growth and the popularity of Bitcoin as an asset and what it can do for people.
So there's a lot of strategies that are working into how people are setting up for 2026. Granted, one of them, of course, we're starting to see is how we're going to see possibly some tax benefits coming to us next year. Japan is now moving to impose a flat 20% tax on crypto. And this is matching their stock market rate. So my question, do you think we're going to see that in 2026 out of this administration, where they're trying to keep pace with things like what Japan has done, especially around crypto? I was talking to Ron Hammond not too long ago, and he mentioned on it, is tax legislation will be a big factor for 26. What do you think?
Yeah, I mean, I think a lot of the supportive legislation from the current administration has really boosted the market. So hopefully we see that continue in 2026 and beyond. From a lending perspective, right? I mean, we don't give tax advice, but there certainly are tax benefits to borrowing against your digital assets instead of selling and incurring capital gains and perhaps having to deal with some of these other tax implications that continue to surface. So that's really one of the big reasons that people like to use their assets, to borrow against them, not sell them, not have to pay capital gains and deal with those things. And that's also why we're seeing a lot more of these buy, borrow, die, and never sell your coin, retire on your Bitcoin types of strategies, because that never selling and not having to pay the tax man is really one of the underlying principles to a lot of these strategies that we're seeing.
Do you think that we are in a new cycle where the new investors coming into Bitcoin and digital assets in general are going to really start understanding this model going forward? It's been used in the real estate market forever. Do you think that's going to translate well to what we're seeing now with a lot of these new investors? Because we're talking about people maybe under the age of 40 that might not be necessarily aware of all of this strategy. What are you seeing?
Absolutely. And I think too, what's going to be a big unlock for people is, for the past, basically since the inception of Bitcoin-backed lending, at least from centralized finance companies like ours, who are regulated and compliant with US law, et cetera, a lot of the loan terms and the rates and structures have been somewhat rigid. But what we've been focusing on is how do we open up those doors and make it more flexible for people? And that's why we've rolled out 3 and 5 year loan terms. We have 3 different financing options. We've got different LTV tiers and rate structures, and you can do things like Salt Shield for downside protection. So what used to be a kind of rigid one size fits all approach, we're really challenging that and innovating that and giving people a lot more options to choose from, so that they don't have to fit themselves and their goals and their strategy into a rigid set of terms. They can work with us and we can try to tailor the right set of terms, rate structures, duration, financing, et cetera, exactly around what they're trying to do.
So when you talk about those kinds of new terms, instruments in general, is there any one area that you are finding more people kind of migrating to? Longer term, maybe a different kind of approach in terms of the strategy that they're using for Bitcoin lending and other digital assets? What are you guys seeing in that place?
Yeah, definitely. I mean, the convenient financing, I would say, is the biggest, because a lot of people get hung up on this idea of, well, if I take out a loan at 9-10%, how am I going to pay the interest?
Right.
I mean, we've got some convenient financing models to where you don't have to have a monthly payment and you don't have to pay a fee to have that financing option. So that's sort of convenience unlock number one. Number two would be, the longer durations, right? Being able to take out a loan and figure out the strategy over a 3 or perhaps 5 year period
Mhm.
And that unlocks a lot of value for people that are wanting to reinvest the dollars and might have a 2 or 3 year ROI timeline on whatever it is that they're investing in. Well,
Right.
now we can accommodate that with a longer duration loan structure.
Do you think with the rate cuts on the horizon that a lot of investors are maybe looking and trying to set up to take advantage of some of these early market moves? Because now, as we're recording, Bitcoin again under 90K, Ethereum possibly going to dip under 3K again. There could be some more dips here to be purchased, and this is the perfect time to try to get exposure to that. Is that one of the things that you find people utilizing these loans for, is to re-enter the market at lower prices?
Yeah, I mean, I think there is certainly an element to that. I mean, I do work with a lot of high net worth individuals, a couple family offices even, whose thesis is really built around Bitcoin and wanting to purchase additional Bitcoin and continue investing in Bitcoin. And a big part of that hinges on, getting in at the right time. Um, I also think though too, like just our standard like stabilization feature as an example, that helps people. Even if you do get stabilized, we've had people in the last couple of weeks, people got stabilized in the 90s and were able to re-enter in the 80s, right?
Mhm.
So we take those things into consideration as well, as how do we help people protect their position, how do we help people maximize their Bitcoin or their Ethereum, et cetera. And yeah, I mean, we do see a lot of interest in that. Again, just people wanting to stack and buy the dip. That's also how we've tailored our stabilization feature as well, to help people protect their position and ultimately re-enter at a lower price if that's what they want to do.
So Shane, on the 1, 3, and 5 year option, do you have to select that in the front of the loan right now? Is that how it works? What's the model?
Yeah, so we do have that now available in the loan platform. So as you're going through and tinkering with the loan calculator, you'll key in your what state you're in, you'll key in how much money you want to borrow, you'll key in your LTV, you'll select your financing option, and then you'll also have a drop down for the loan duration. So one,
Okay.
3,
All
or
right.
5 year.
I see. All
And
right.
that's outstanding. Yeah.
Can I move it around in the middle of the loan, or do you have to kind of lock in on that?
So, based on user feedback, we have made it really, really simple to refinance your loan at any point
Okay.
in time. So,
All
if,
right.
if the market changes or your situation changes, you can refinance. There's no early termination penalty or anything like that. So, it's very
Perfect.
flexible, very easy to refinance.
I like it. I like it. What is I want to get a couple of predictions for you or from you for 2026. If you look at the Fed for December and January, do you think we're going to get rate cuts on both months, or you think we're going to kind of go 50-50 here? What's your thought?
I would think at minimum 50-50. I mean, without the data, right? It's kind of hard to know which way they're leaning. I think we'll learn a lot more next week. But I think, if their goal is to, bolster the employment situation and try to get more people to work and get more businesses to hire and kind of, fight that side of their dual mandate, I really don't understand the point of holding rates steady or raising or anything else other than, reducing the cost of capital and encouraging more businesses to borrow and hire and put people to work.
Yeah. Yeah. Well, that's going to be, I think, the argument that everybody's going to have. Clarity Act could be on the maybe on the wing of being able to get approved. That's coming now, likely, at least in terms of the markups, possibly early January. You think we get this in the first quarter of next year?
I hope so. I haven't read through all of the text, but I do like a lot of the things that they've called out in there. I think it both protects borrowers further, and it also helps a lot more companies kind of understand how to operate, how to build their own, digital asset management and risk mitigation strategy. So I
Yeah.
think it's a win-win for everybody that's involved. So my fingers are crossed that it gets done sooner than later.
That's what we're hoping for. Hey, listen, Shane Crockett, it's been great having you on. Thanks so much. If you guys want to learn a little bit more about Salt, make sure and jump over to saltlending.com. You can see their website. We'll leave a link down below. But thanks for coming in today. We appreciate it.
Thanks, Paul.
You bet. All right, you guys know what to do. If you're not part of the Barron Market Edge, you should be. It's an absolute free platform where you guys can get additional research, insights. I drop some emails that give you insights on where I think the market is going, both on global macro, down to the tools that we use with trying to analyze the market. Also hit me out there on X at Paul Barron. We'll catch you next time right here on The Paul Barron Show.